Hello girls. So in today's class we are going to see illustration 23. So from chapter 4 and it's in page number 173 in your textbook. So this is going to be yet another different problem. So where we are going to see this problem from the perspective of the calculation of IGST and especially when it is imports. Okay, so this is a problem to do with imports. So let's see how to go about calculating IGST and how to go about calculating the value of the imported goods. Alright, so in this problem there are two things that we are supposed to arrive at. So let's read the problem firstly in order to understand what exactly is the requirement. So you have Sri Nagaraja, registered dealer, imported goods for rupees 90,000. Landing charges is 1% and incurred expenses to produce final saleable goods of rupees 10,000. BCD at 10% was chargeable on imported goods. These manufactured goods were sold in the customer warehouse for rupees 45 lakhs. Rate of IGST is 12%. Compute the value of imported goods, aggregate sale value and net GST payable for the transaction. Alright, so what is that they're wanting us to calculate here? They're wanting us to calculate the import value of the imported goods, and then they're asking us to come up with the aggregate sale value and find out what is the net GST that which is payable. Okay, so as usual, just like how we are finding the transaction value, we have to compute the value of the imported goods here. Alright, so and other than that, the net GST we know how to calculate. It will be the output tax minus the input tax credits. Okay, so it is as simple as that. So let's go about calculating this particular solution. So I have worked it out in a book separately, so you can look into that. So yes, yeah, calculation of the cost of production is the first thing that we have to do, as it is told in the problem for us. What is the cost of the goods? The cost of the goods given in the problem is 90,000. Okay, you all can look into the question. So the cost of the goods is 90,000. And then after that is the landing charges 1% and also incurred other expenses to produce final saleable goods is 10,000. So we are adding that other expenses worth rupees 10,000. So now we are arriving at a total of 1 lakh. So this you can consider as the total cost of the goods that which is sold. Then 1% of landing charges is incurred. Okay, so let us calculate 1% of landing charges. So the total sale is 1 lakh. 1 lakh into 1 divided by 100, and that's going to give you 1000. Okay, so this you are going to add to this 1 lakh, and that's going to give you 1 lakh 1000, which is the total value of imports. Now apart from that, there are also other adjustments which are given in your textbook. That is, the manufactured goods were sold in the custom warehouse for rupees 45 lakhs. The rate of GST is 12% and the BCD is 10%, that which is chargeable on imported goods. What is BCD meaning? Basic customs duty. Okay, what is it? It is the basic customs duty. So we have to add that basic customs duty because all these are expenses that which has to be added to arrive at your total value of the imported goods. Alright, so basic custom duty is 10%. So now our total value of the imports is 1 lakh 1000. So we are taking that 1 lakh 1000 into 10%, and that's going to be 10,100. Okay, so now there is another special thing which is not given in the problem, but yet it has to be taken into consideration, and that is nothing but education cess. Okay, girls, whenever you come across this problem to calculate your imports and to arrive at the IGST payable, then you have to take this by default. Okay, so remember this adjustment, whether it's given in the problem, not given in the problem, it is your duty to add to the value of the imports. Okay, so that is nothing but the education cess, okay, which will be charged on the customs duty, only on the customs duty, not on the total value that you are arriving at. Remember that, girls. So you have to add the education cess on the customs duty, and also remember the education cess will be standard as 40%, sorry, 4%, I'm so sorry, 4%. Okay, so 4% will be the standard education cess that will be charged on customs duty. Okay, so now what is your customs duty that you arrived at? 10,100. So on that 10,100 you will calculate 4%. So that's going to be 404 rupees. So you are going to add the basic customs duty and the education cess, and you are going to arrive at 1,11,504 as the value of your imports. So this is your transaction value as far as imports are concerned. So now we know next we have to calculate the net GST payable. So for the net GST payable, as usual, it is your output tax liability minus your input tax credits. So what's your output tax liability? So as I read in the problem already, the output tax liability will be calculated on the sale. So what is the sale that which is made? The sale amount is 45 lakhs, which is given in the problem. So on 45 lakhs, what is the rate of GST? That is also given as 12% in the problem. So 45 lakhs into 12% will be 5,40,000. So that is your output tax liability. Alright, so now we have to calculate our input tax credits. So in order to calculate the input tax credit, it will again be the IGST percentage on the purchases that which is made. Okay, so what is your purchase? Whatever you have imported, isn't it? The value of the goods that which you have imported. So the value of the goods that we have imported, as already we have arrived, is 1,11,504. So 1,11,504 into 12%. You are going to take into consideration to calculate your ITC, and that's going to be 13,380. So now in order to arrive at the net tax payable, you have to minus this 13,380 from 5,40,000, which is your output tax liability. So when you utilize this ITC, you are going to have remaining 5,26,620 as the remaining tax that which is payable. So your net tax payable is 5,26,620. So once again, I am reminding you girls, this problem is about the calculation of IGST, and it is a problem on imports. Okay, so first we have calculated the cost of production and arrived at the value of the imports, and then we have calculated the net GST payable. Okay, so all the expenses that you are incurring in order to import your goods, you have to take into consideration for arriving at value of the imports. And whenever imports problem is asked, make sure that you are also adding 4% of your cess, education cess, on what? On the BCD, that is a basic custom duty. Okay, so that is a must, it goes without saying. Okay, you have to calculate the BCD and add that to the value of the inputs. So that's about this problem, girls. If you have any doubts, you can always clarify. Thank you.